Welcome to the weekly market recap. Today is Saturday, August 8, 2026. What a wild ride across Wall Street this week. The bulls took full control of the steering wheel as the S&P 500 and Dow Jones smashed through to brand new, shining all-time record highs with the S&P topping 7,750. Why the sudden burst of rocket fuel? It was a double whammy of relief. First, crude oil tanked nearly 8% on talks of an Iran ceasefire and the potential reopening of the Strait of Hormuz, easing those terrifying inflation fears. Second, cooling labor market data signaled to Wall Street that the Federal Reserve can comfortably keep interest rates on ice. Taking a look across the sector chart, green was the dominant flavor of the week. Tech and communication services led the charge higher as enterprise AI monetization proved it's very real, boosting software heavyweights. Airlines and consumer discretionary stocks also threw an absolute party as lower oil prices meant cheaper jet fuel and more spending money for consumers. On the flip side, energy stocks took a noticeable hit as crude oil prices plummeted, making energy the lone red spot in an otherwise sparkling bullish sea. Over on the Fear and Greed Index, we are sitting comfortably at 64, placing us solidly in greed territory. Investors are feeling confident and buying dips, but we haven't crossed into extreme blinding euphoria just yet, meaning there's still fuel left in the tank for this rally. Headlining our top news story of the week, crude oil prices suffered a major breakdown, dropping over 7.7% down to $78 a barrel. Diplomatic talks regarding an Oman-brokered ceasefire and plans to safely reopen the crucial Strait of Hormuz sent relief rippling through global markets. Lower energy costs immediately dialed back Wall Street's worst nightmare. Sticky reignited inflation, giving stock investors the green light to bid equities up to historic heights. Our second major macro catalyst came straight from the labor market. The ADP private payrolls report came in softer than expected, followed by non-farm payrolls unexpectedly dipping. While a slowing job market sounds spooky on the surface, for Wall Street traders, it was music to their ears. A cooler labor market takes immense pressure off wages, virtually eliminating fears that the Federal Reserve will need to raise interest rates at their next meeting. Rounding out our top macro news, big tech earnings prove that the artificial intelligence wave isn't just hype. It's converting into cold, hard cash. Outstanding quarterly reports and raised forward guidance from software giants like Palantir, Microsoft, and Amazon completely squashed fears of an AI slowdown. Enterprise adoption is accelerating at a breakneck pace, igniting a massive short squeeze and sending institutional money flooding back into software and semiconductors. First up in our S&P 500 spotlight is Airbnb, which went on an absolute tear, soaring over 17.4% this week. The travel giant crushed Q2 earnings estimates and released glowing forward guidance for third-quarter travel bookings. International travel demand is surging, and margin expansion showed Wall Street that Airbnb's platform model is printing cash like never before. Bears got completely trampled as the stock posted its best single week of the year. Next up, software darling Palantir Technologies rocketed over 10.3% following a textbook beat and raise earnings report on Monday. Palantir's artificial intelligence platform AIP is seeing jaw-dropping demand from U.S. commercial customers, with commercial revenue jumping exponentially. Analysts rushed to upgrade price targets across the board as Palantir proved it is one of the ultimate pure-play AI software winners in the S&P 500. Rounding out our top S&P 500 movers, Microchip Technology surged 13.9% after months of brutal inventory digestion in the semiconductor sector. Microchip delivered earnings that signaled the bottom of the chip cycle is officially in. Management highlighted recovering order books across automotive and industrial end markets, triggering a massive wave of buying from fund managers eager to catch the cyclical turnaround. Kicking off our small cap highlights with a bang, Rocket Lab USA blasted off by an astonishing 25.3% this week. Investors couldn't buy shares fast enough after the space launch company announced new commercial launch contracts, key technical milestones for its upcoming medium-lift Neutron rocket, and expanding national security defense backlogs. Rocket Lab is rapidly cementing its spot as the premier public space company on Wall Street. Our second small cap standout, Coherent Corp, exploded 13.4% higher. Coherent is benefiting massively from the AI infrastructure land grab, as its high-speed optical transceivers and silicon carbide technology are essential components for training massive AI models inside hyperscale data centers. Wall Street analysts piled on high-conviction upgrades, calling Coherent an under-the-radar AI powerhouse. Finally, optical networking player Lumentum Holdings jumped 6.2% into record territory, crossing above $890 per share. Just like Coherent, Lumentum is riding a tsunami of cloud provider demand for high-speed laser components and optical switches needed for next-gen AI clusters. Earnings numbers showed accelerating revenue growth, proving that small-cap tech supplies the essential pipes for the AI revolution. Looking at the weekly chart for SPY, the S&P 500 ETF staged a massive technical breakout SPY smashed through former resistance at $760 to close at new record highs near $775. Moving averages are sloped steeply upward in textbook bullish alignment. Going forward, the previous resistance zone of $755 to $760 now serves as primary support, while technical projections point towards psychological resistance at $785. Turning to the tech-heavy NASDAQ 100 ETF, QQQ staged a sharp bounce right off its 50-day moving average near $580, pushing back up toward $595. Tech is regaining its momentum after a brief consolidation period. Resistance sits right around the previous high at $605 to $610. If bulls can clear that hurdle, a run to $620 is on the cards. On the downside, key support holds firm at $580. Over in small cap land, the Russell 2000 ETF IWM flexed serious muscle, climbing over 1.1% on the week to hover around $303. Small caps are benefiting immensely from falling yields and rate pause expectations. Immediate technical resistance sits at the major psychological level of $308 to $310. Meanwhile, strong support is locked in at $295, where buyers aggressively stepped in. Switching gears to crypto, Bitcoin posted a solid week, gaining roughly 3.1% to trade around $64,960 in Zz. Spot Bitcoin ETFs enjoyed 4 consecutive days of positive inflows totaling over $745 million. On-chain data reveals heavy institutional accumulation between $62,000 and $65,000. Key support is firmly established at $63,000, while bulls need a decisive breakout above $65,600 to trigger the next leg up. Ethereum followed Bitcoin's lead, rising 2.5% to cross back above the key $1,900 mark to trade around $1,915. ETH is showing steady momentum as DeFi activity rebounds. Primary support is well defended at $1,860, while key resistance sits at $1,950. A clear breakout above $1,950 could unleash a fast rally toward $2,100 as network gas fees and staking activity climb. The total crypto market cap expanded by nearly 1% to reach $2.21 trillion. Altcoins showed selective explosions this week, with major movers like Binance Coin, BNB, Solana, OL, and Dogecoin Doge gaining up to 16%. While XRP and Tron experienced slight consolidation, risk on sentiment is clearly spilling back into the broader altcoin market as Bitcoin stabilizes. Wrapping up the week, market sentiment is riding high on a wave of Goldilocks economic data, falling oil prices, and blowout AI earnings. Looking ahead to next week, all eyes will be glued to the upcoming CPI inflation report and U.S. retail sales data, along with diplomatic updates on the Strait of Hormuz. If inflation comes in cool, this market rally could get even wilder. That's a wrap for this week's recap. If you enjoyed the breakdown, smash that like button, hit subscribe, turn on notifications, and drop a comment below with your top stock pick for next week.